Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on May the 4th, 2022 with a Forex market trade analysis for you. We're going to talk about the major currency crosses and some other markets, and before we do that though, we want to make sure to remind you with our disclaimer that this webinar is for illustrative and educational purposes only, and if you haven't done so already, whoops, wrong one, that's not it, there we go. And if you haven't done so already, please make sure to subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle versions. Alright, without further ado, we're going to go to our live screen here and show you what's going on in the Forex markets today. Now, we know that it is a Fed day, so we have the Forex-Trading-Unlocked.com website already pulled up. So, and for those of you that are watching us on Twitch and YouTube, please, if you wouldn't mind, give us a nice little like and a little share, and push it out to your friends out there. We would appreciate it. And if you have any questions during this broadcast, make sure to leave them in the chat. And if you watch this video afterwards, leave it in the comment section and we will answer them. So, and obviously if you're in the chat, we will get to them, and we'll talk about other markets too if you wish. So we already have the workstation pulled up. We're going to skip past the economic numbers. We already know that it's a Fed day today. Interestingly enough, I don't think there's going to be any shock as to what they talk about and what have you. I think for the most part, it's going to be all about what we've been hearing all along. I mean, as far as inflation, everyone's aware of what's going on there, and we know what's going on with the Ukraine and what have you. So the question are they going to say anything new? I doubt it. We know that the dollar index here is hovering below its highs, so it's under a little pressure today, and that's just what I was seeing as profit taking. Remember that most of the currencies out there are trending against the dollar in a bad way. They're bears, and so any upside movement right now is viewed as a correction first and nothing else, because the trend is your friend. Lower move lows and lower move highs continuously, repetitively, and one after the other is indicative of what? A bear trend. Remember that always. So the trend is your friend. So right now, remember that you're looking for a counter trade, counter trend trade situation. The question is with the momentum out there, is a correction sustainable? Currently, every time you seem to have this any market oversold or overbought, in relationship to the dollar, it doesn't seem to hold up for very long as far as a bounce. We've had the last few sessions, as you can see, the market's trending sideways after having established a low last week. As far as being bullish right now or bearish, well, let's say we do get a short-term correction and we stay in a very bearish way. Well, then a rally up to 107, even basically up to 107.56 area, somewhere around here, I think would be the extent to what you would see as far as a rally. I don't know how many of you are trading the Euro US dollar cross. Right now we have a low risk buy against the low, and we are looking for, I think we could still challenge the 106 even area over the next, today is tough because of the Fed meeting and the European markets are closing soon, but I think that over the next couple sessions into next week, we may, especially if you see a reprieve in the bond market, meaning a bond market rally and 10-year note rally, I think you could see the dollar have a profit-taking slide, and that would be driven mostly in part by, I think, a euro rallying up towards this 107 area. I think above 106, it's going to catch a lot of weak shorts off guard, and that'll propel it up towards 107, but I don't think it's very sustainable overall. So, and I'm only going off of the recent swing lower move high to lower move low for this price target for here. You can see the trajectory of this trend. It is pretty steep, and look at what that does. This downward sloping resistance line, which keeps the trend intact, comes right into this area, so we can see us having trouble getting up into here, bouncing off this resistance line, and then if it stays sideways and consolidates, it would be very surprising to me. I think if anything, if you do get a spike up, it will come back. Then it may come back down to this area for try and test support. But even more likely, I think what you're going to do is see a further slide in the euro. I would look, instead of trying to buy this market right now, you're in a low risk buy situation. I would risk no more than a few pips below the low, because if we fall through this low, we could have another slide like this. We are heading towards parity, just to let you know, as far as my calculations are going. The politics going on, right now the current embargoes around Russia and the different sanctions and what have you. These are a double-edged sword when it comes to the EU, and Europe is suffering in a big way. They are now talking about not purchasing any oil from Russia anymore, which that just means that they're going to the rest of the open market for their oil, which will cause more of a demand for their oil and shortages across the globe when it comes to those producers, because we aren't drilling here like we should. So, but that's a whole nother topic. Oil is also set to rally, and as that rallies, that means the cost is going to hurt the EU very much as well. Their economy is on shaky grounds, folks. I wouldn't doubt that if the political climate doesn't change radically, both here and in the United States and in the EU, which right now it is not going to, you are going to see a continuation of the inflation, a contraction of the economies in the Western world, and it's just not going to end. We're going to see this compound the trend, and I think you're going to see the euro US dollar at parity probably. My original calculations were by July 4th, somewhere between the middle of the summer to the end of August, before the fall started. Now I think that we have a shot at parity probably sometime within the next couple of months, probably before July 4th. I think that after July 4th, we'll see an accelerated slide where we could probably see the euro down to the 94 level, 95 cent level. To give you a scale on that one, if you look at the monthly right here, we're treading near to 2017 lows anyhow. We know that there's support basically where we're at right now, but a failure from 103. I mean, this market's been in a bear trend for a while. Can you see what's going on here? It's getting ready to make new, not just monthly lows, but multi-year lows. We haven't been down below this area. Look at this. It's going back to 2008. Look at the euro was up at 160 back in 2008. Do you remember the Great Recession? Remember that? Look at how strong the euro was against the dollar back then. That's when we had deflation also. We had high unemployment all of a sudden. We had deflation, all kinds of other things. Now we have, well, supposedly we have high unemployment in the United States, but even though there's over 11 million jobs now that are open, somehow that makes no sense. But even in the EU, unemployment is relatively low. However, inflation is rampant, which is something we didn't have back then. Also, we didn't have the tensions between the Ukraine and Russia. So that being said, you have to pay attention to these things. The euro right now is set to make not just new lows on a daily basis, a weekly basis, on a monthly basis, but on the yearly basis. And we are looking at a bear trend that is continuing. And be mindful of the fact that we had set this lower move low here back in November of 2016. We made this lower move high here. This is where it got kind of choppy and went sideways here as we held support here. But this is in February. This is in 2020. This is back when the beginning of the pandemic started. So all of a sudden you had strength in the euro because initially this is the initial dip. Remember, this is the spring of 2020 and COVID, and then here we failed to make the new high. This high held, and by the fact that this high held on a long-term trend basis, that kept us in sideways. And then once we took out this low right here, well, that's right where we're at right now. So we go back to the monthly, now we go to the weekly, and as you can see that this line right here is the up and down line. So no matter what, unless we get back above this here 106.37 area right there, we don't have any chance of really finding any type of true support in the market. We need to find out where we're going to get that. Now, how are we going to find out that? Well, I'll tell you what. We have a Fed meeting going on today. We're not going to have much action until 2 o'clock. I wouldn't expect an overzealous trade afterwards, and anything that does happen, I would stay away from anyhow. If you're not in the market already, I would wait until after the meeting to get in, wait for tomorrow's trade, and expect us to start to see some movement again. I don't think there's consolidation that's going on right now. I don't think it's going to hold up. I think if anything, you're going to see a little bit of profit taking in the dollar, see a little bit of strength in the euro before it starts to fall apart. So, and I do believe the trend is going to continue to go lower because of these geopolitical things that are going on, and the fact that there's nothing in the short run that is going to say that this is going to stop, this trend, if you will. So if that's the case, the momentum right now is about finding not support, but to see how far it can stretch this bear market before we start to see some intervention. And that's the thing that is the key. I don't see the intervention happening. From a conversation that I had with someone from the UK and also someone from the EU this weekend, I asked them, I'm like, honestly, these are two business people, they're not even traders. I'm like, when do you think, but they're very knowledgeable in the business, in the economic sense of the business and what have you. I asked them, when do you think that your respective central banks, meaning the ECB and the BOE, whether or not they would start to defend their currency? And the first thing that came out of the mouth from the UK was that they don't have the bullets to do it. And the same thing remark was made by the person from the EU as well, from France, that they don't have the ability to defend their currency. So if they don't have the ability to defend their currency, because I asked them, like, if the Bank of Japan, which is now retracted, is saying that they would defend their currency, and their finance ministry has said they would defend their currency, why would you not see a follow suit amongst the other majors? I mean, the yen is the third largest traded currency versus the dollar. The euro is second. The pound is fourth. Why would they not be in sync with that thought process? Because remember, interest rates drive currency pricing. So anyhow, that trend remains, and we're looking for a continuation of the slide. So let's go to the British pound US dollar and see what's going on here. All right, so British pound US dollar also is helping to give a little support to the currency market, or to these other currencies versus the dollar. And as you can see, that this is all just, I mean, they're all counter trend moves, and you have to be mindful of the fact that most likely these are all going to come to a close very, very quickly. The fundamentals are just not there to help them to continue to go higher. So now look at the pound here. We have the low that was set last week right there around, what is it, around 124.09. Okay, so now this is a significant level of support. All right, I would think that we should have a challenge of the high right around 126.21 right here, if you will, sometime over the next couple of sessions. Today you can see that it's basically sideways, it's winding its coil, it's on pause. Does that mean that it's going to kick up its heels and start sliding again real quickly? I don't know about that one. I don't think you're going to have such a sell-off like you had at the end of April going into May, which is quite extreme, you know. And I think that the pressure is there to remain bearish, but right now I believe that you could see more of a bounce in the pound than you could in the euro. And the only reason I say that is because of the price of oil. The price of oil right now being up, like today it's up I think $4 before I went into this webinar. And it's likely that we're going to see a challenge of the 116 high in crude. If we breach that, and to give you an idea of what I'm talking about, remember futures we can't show live, so this is in a lag. You can see as of yesterday that the market was trading around 102, and now let's see, the crude is trading at it's up $3.75 here at 106.16. So crude at 106.16. So it's a little bit lower than it is here. So 106, there we go. So right about right there, this is where crude is trading. I think that we are ready to break out. We've been consolidating, we've been wedging, and now you're going to see the breakout occur. So here's this little wedge, and here's this little wedge, and right now you can see we're ready to take a challenge of this little area here. If we take out this last swing high, right around 108, above 108, we're looking to challenge 116. Above 116, we're looking at 130. So why are we talking about this? Well, that will help to support the pound, and it will also help to add pressure to the euro, which we were talking about before, helping to drive it towards parity. Okay, so these are things you need to be mindful of when you're trading these things, because the trends are being supported by such strong factors that are geopolitical in nature. These are things that normally we look at the fundamentals. We also look at the technicals, but technicals right now, because of these trends, they're buried. So I don't know what indicators you may use out there, but it is very hard to use any type of overbought, oversold indicator, that is for sure, when it comes to trying to figure out what is going on with the currency markets. So the pound right now, I think, is finding its base. It may try a little bit on support a little bit over the next couple sessions, but I believe you are going to see a rally that comes to challenge up to this area around 126.21. Now, I don't think you're going to see a big, huge run up in the pound, but I think that you could see definitely a rally up to this 127.53 up to 128.33, somewhere correcting up to here. With the oil rally going on right now, especially if it does start to explode to that 116 level, then I think you should be mindful of this, because it's very likely that we will see this area get challenged. Now, as far as dollar strength, if the dollar is strong versus the euro, we've been talking about the divergence that's going on right now in the currency markets. It exists. So even though the dollar is pounding certain currencies like the US dollar yen or the euro US dollar, other currencies are not quite in that environment. Look at the US dollar Canada. That thing's been going sideways in a chop for a very, very, very long time. So how do you make up for that one? You know, that's something that's going to be interesting to see. When does it finally break out? Like I've been talking about, if you watch my videos for a while now, that the US dollar Canada is just a complete head scratcher on so many levels. It's really hard to get a hang of what's going on with it. It really doesn't want to go up. It doesn't want to go down. It just wants to seem to test support and then springboard up and hit resistance. You know, unlike this market here, which is a definable trend. You know, I mean, the pound is definitely under pressure, but I believe that we're starting to see, especially with the oil rally, an area where we can start to see a little upward pressure. Now, however, if we fail from $1.2409, and for transparency's sake, I am actually in a position right now long against the low from a couple days ago, and just a few pips below that. So it's a low risk buy for me. I'm looking for this correction to potentially rally up to here, and that's it. I'm not going to just make a little chop there and then look to reverse and get short the pound US dollar overall. And especially if oil, it's my way of playing the oil trade and also the interest rate trade as well, because if we see after the Fed meeting that we have a little bit of a profit-taking rally going on in the 30-year Treasury bond and the 10-year Treasury note, that would help to support strength to give the bulls in the pound US dollar and the euro US dollar enough momentum to break out at least from this current swing low, a lower move high, and set us up for an extended correction to the upside. All right, now let's look at the US dollar Swiss. This is another one that, boy, talk about volatility and a trend, my friend. Like, this is something that it's on so many levels did not expect to hit so hard. We've been calling for a rally up to parity that would hit sometime this summer. We may hit it sometime in the next week or two. This momentum is fierce. While the dollar is under pressure versus other currencies, look at how strong it is against the US dollar Swiss. A lot of this has to do with the fact that Swiss is no longer a neutral country. When they started to join in on sanctions against Russia, they did something they've never done before. They broke their neutrality. During World War I, during World War II, they did business with everybody. It was the Allies and the Axis powers. They've always been a hub, no matter what, or a place to store value where you were protected no matter what your interests were. That being said, it used to be a flight to quality currency. In times like this, even with Europe under pressure, you would think that the U.S. dollar Swiss would not be rallying like this. It should be at least at a very slow rally, or it should be actually where the Swiss is stronger versus the dollar because of flight to quality, and especially with all the pressures that are going on globally, not just in Europe. So that dynamic has disappeared. Like, I remember when they broke that neutrality a month ago, and I said, I don't know how much of an implication this has on the currency, but I believe that the flight to quality nature of the Swiss franc is not, maybe it's not gone, but it's definitely highly diminished. And obviously from the chart here, you can see that it is. I would be very mindful of this, folks. You're not going to see a move like this without any, there's nothing going on between the U.S. and Switzerland, and look at this trend. It is fierce for the European currencies. This is even more fierce than the U.S. dollar yen trade is. And that's the question too, is remember when we were talking about who's going to protect their currency? The Swiss have seen a devaluation in their currency. It's very, on a scale here. Look at back at the beginning of March, we were trading at 91.5. Now we're almost at 98.5. That's a $7 rally in just in 2 months. So which if you look at it on a monthly basis, see, look at this. This is an extreme rally. We just don't get, you get these moves, but overall, look at your mostly boom, 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 chop, 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 up, and then it pulls back. It like range trades a lot. It wedges a lot. But here we see this volatility. This is something that if you're going back in time, look at what the kind of volatility we're expecting here. I don't think it's going to change. And as far as hitting parity, well, with this momentum, like I said, I was originally looking for parity to trade up in this area. Somewhere in here, I was looking for us to reach by the summertime, by midsummer, end of summer. Now the way we're looking on a daily basis, you can't see it there, but let's go to the weekly basis. We're just below it. We're talking about hitting the 99 fringe. That can happen very, very quickly. So, by the way, let's just double check. I haven't looked to see if we have any questions on Twitch. No, but we got some people out there. Let's see who's checking us out right now. We got some people on YouTube watching also. We got some likes. Thank you very much. Don't forget to share it with your friends. So, all right. So now we have the U.S. dollar Swiss on this rampage. Is there a correction happening? There will be one eventually. As far as how far can we go? Well, I guess if you go back from here to here with this volatility, just on a 50% basis, this is where we're looking at, right around here. I don't think we're going to get much further than that, and I don't even see that coming right now, not with this momentum. A lot of this has to do with the interest rate policy dynamic. If we see the Swiss start to, I would think the first thing they do to defend their currency would be to start raising interest rates, and also to help to get rid of the mystique of what they've done as far as ending neutrality. If that occurs, I would expect to see a big sell-off, and meaning that it's not about how much they say they will do, or let's say that they actually pull the trigger, and let's say they pulled the trigger and did a 0.5 point interest rate hike. I think short term that would have a big sell-off, meaning the Swiss bulls would come back and the U.S. dollar Swiss would get a big sell-off. I think it could fall back easily to this area here, but unless they do like some radical, like a full point, and not to mention saying that they plan on raising rates at an excessive rate over a short amount of time, then I could see where you would see an extended bearish move in the U.S. dollar Swiss. But otherwise, I think any break is a break to buy. So right now, I would say selling into this, you're playing with fire. You're risking the high of the day, a couple pips. You know, you could sell against that, I guess. But I think right now the momentum is so fierce that we haven't ended this top, and we have more upside action to see. And who knows? Maybe we even see parity in the U.S. dollar Swiss already by you know, next week. You know, it wouldn't be out of the realm of possibility, that's for sure. But anyhow, so as far as the European currencies, we've seen what's going on there. They're helping to drive the dollar index higher, and this is also supporting it. Thinking about this, you look at this U.S. dollar Swiss rally that's going on. We had, let's go back to this. Remember the dollar index? Euro US dollar right there. That's what's helping to put a little drag on the dollar index. British pound US dollar. This one here, now it's neutral on the day. That's not helping the dollar or hurting the dollar index at all. But the US dollar Swiss, this is almost overtaking the strength of the euro. The only problem is that there's the euro is much more dominant currency, so the volume in the euro is much more significant than it is in the Swiss, but not by much. These dynamics right here with this momentum of this rally as far as price movement is pretty close to it, so it almost cancels it, and that's why you're seeing the dollar index go sideways. You know, remember when we looked at the chart at the very beginning of the webinar, we looked at the dollar index. So, and that explains why we are having that choppiness, and it's because of the divergence of the currencies. You know, like right now we're trying to see a bounce against the dollar and some of the biggest currency crosses, and it's just, they're struggling. You know, now speaking of struggling, the one that's actually pulling back today is the US dollar yen. Not by much. You can see it's a very flat trade as well. We're looking for a breakout. 130. They're trading right at the line in the sand, folks. This is the area where the Japanese a month ago came out and said that they would intervene to protect their currency at the 130 level. Then a few weeks ago they had now this was okay. So a month ago, the Bank of Japan as well as the head of the finance ministry both acknowledged that they would do everything and anything they could to support the yen, meaning it would become bearish, the US dollar Japanese yen trade at 130. They said that they would start buying yen. They would also look for, I know that there was talk about them asking other countries to come in and help to support their currency as well. That's a rough call because for other countries to come in and buy yen to support it against the dollar especially, that puts them in an inflationary environment. It also adds to their debt load and structures and things that works against them trying to fight inflation in their own economies. And the irony is that Japan has relatively low inflation versus the rest of the world. The only thing that they really have inflation in is commodity prices for manufacturing, for the most part, and energy as well. Food pricing and other things are actually not that bad in Japan. They are a very self-sufficient country, as well as because they can get most of their food from the ocean around them and grow it themselves. They're not having these issues, and also it's the way they grow. They don't use all these pesticides and chemicals that are found in the Western world for a lot of their crops. Not that they don't use them. I'm not saying that they don't use chemicals, because they do. However, in a lot of things they don't. And that is one of the reasons why they have kept inflation at bay. You don't hear Japanese people screaming about what's going on. You don't usually hear them screaming about anything very, very badly as far as negatively, but they're not out there on a bandwagon about inflation and things like that. So now the fact that the Bank of Japan went from that original stance of defending their currency, they still hold that, but then they said that they're going to keep their interest rate at 0.25% in the market rate, meaning that they were going to buy their bond market, their treasury market, to maintain a yield of around 0.25% or less. So now that is counterintuitive to defending your currency, because that means you're artificially keeping rates low, which means if you're trying to keep rates low, that depreciates your currency. It doesn't appreciate your currency. So you're working against yourself. So that's what's going on. Now remember, it's a pretty quiet day out there, so I'm rambling because it's a Fed day. What do you want me to talk about? You know, there is no trade until after the 2 o'clock number. So we're getting into the dynamics of what's going on and get ready for the swings, because we are not staying quiet and sideways like this for very much longer. All right, so now let's go to the Australian dollar, US dollar, which has had quite the little bouncy trade. It had a buy signal yesterday, and it has upside follow through today. We have an upside target of 72.41 up to 72.92. I don't know if you could sustain a rally above this in the short run. I think right now the price of oil is helping to pop this. If we have the reprieve in the interest rate market in the U.S. As far as on a market rate, then I think that will also help to give momentum up to here. But it's a very dicey issue when it comes to strength in the Australian dollar, U.S. dollar. It was there going into April, but then it fell off in a big way. A lot of it has to do with the worrisome specter, if you will, of COVID-19 and more lockdowns returning to Australia. If that occurs, then that's probably going to end up making the Australian dollar, US dollar a bear again. So we have to be mindful of the rallies that you have right now. But we have a short-term buy signal as of yesterday, a bullish engulfing line, which you can learn how to trade if you read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And there's a link on our website for all kinds of information on it as well. So a failure from the low from 2 sessions ago, that would make this confirm, obviously, more bearish momentum in place, and looking for multi-month lows, targeting a slide that goes below 70 cents here and all the way down to 69 cents. I think that you can have extreme sell-offs moving forward, but I think as we do hit support more, you're not going to see excessive sell-offs like you had here in the middle to end of April. I think you're going to see more something that was in the beginning of April, where it came down, had a correction, and then boom, started selling off again. So the trend is your friend right now. The low from 2 sessions ago is a very pricey low as far as figuring out our long-term direction, because a failure from here really confirms the bearishness of the Australian dollar versus the US dollar, and weakness that most likely will prevail as we head forward over the next few, not just weeks, but few months as far as that's concerned. Now, this market's getting a rally. When it comes to New Zealand dollar, US dollar, which has been trading in tandem pretty much with the Australian dollar, but not to the degree, it has other issues. It's a dog. It may see a correction, but you can see that there's no buy signal here that happened yesterday. It has a pause for the cause. It looks to maybe go sideways over the next few sessions, especially if you don't see a major rally in the Australian dollar, US dollar, or a major sell-off in the dollar. COVID-19 restrictions are haunting New Zealand. There's a lot of problems with the economy. It's really messing with them. And the fact that they're more likely going to go into more extreme lockdowns as these new strains evolve, that's not good for their currency. It's going to be hard for them to bounce. And unlike the Australian dollar, this one has made newer multi-month, multi-week lows, and I think you're going to see this divergence to continue. And even if you see strength, I think you're going to see strength in the Australian dollar over New Zealand dollar versus, and the New Zealand dollar is going to have weakness in many other ways too. So Australian dollar, New Zealand dollar, if you look at this, look at that, it's exploding to the upside. So you can see the dynamics where those two typically go together to some degree in trend. Not even remotely is the strength in the New Zealand dollar. Australian dollar, yes, and this is another play too where you may see this spread wide. I mean, look at how much, this is a big move. From just the middle of March to the beginning of May, we went from 106 to above 110. $4 rally. This is a big. You don't see these kinds of moves in the difference between the Australian dollar and the New Zealand dollar. I mean, you see trends, you get price swings, but right now you have an explosion in momentum. All right, U.S. dollar Canada. This one is a tricky one. We had a sell signal yesterday. We're looking for a potential slide down to 126.85. 126.33 I think is your extreme, especially with oil on the rally page. This market is a chop fest. I've been saying it's a head scratcher where it wants. Overall I'm bearish this market, but it's hard to be that bearish because of the commodity trend right now. It's just the indecision and indecisiveness to even come to any meeting of the minds between the U.S. and Canada on a political basis and on an economic basis. It just boggles my mind, especially because you got two people who are pretty much the same. One's just young, one's just old. As far as leadership, they're both supporting other countries and not defending their own. So, especially on an economic basis. And that's the one thing I think that is going to drag on the Canada too, is that their economy is in some dire straits. Their debt load nationally has exploded beyond levels that they, I mean, Canada's a big landmass and it's a big country, but it doesn't have remotely the economic resources or economic might of something like the United States. And so that's going to weigh on that currency. So I think you can see that even if it's a profit-taking move and just a sell-off before we get another big leg up for the bulls, it's likely that this sell-off is going to continue to hit support, at least in the short run, for the next couple of sessions. I wouldn't expect anything beyond, once again, that 126.33 area, though. Okay? So that's something to be very mindful of as you trade the U.S. dollar Canada. So we don't have any questions out there, so now we're going to go to the BTCUSD. Let's go to the cryptos. All right, BTCUSD getting a little bid today. Maybe it's because everyone's watching the Fed. No, I'm just kidding. No, it's just an up day. It's in a chop fest. It's not really outside of the range it's been trading in for the past 4 or 5 days. This market right here, I think, is you're going to see more and more of this type of consolidation periods where most of the range is in a few $1,000 range. Right now we are trending lower, coming off of support. Could we get a rally to the upside in a big way? I would say if you want to know where Bitcoin, it's kind of funny. I used to say Bitcoin was like almost like the dollar index for the Forex market, for the current. So meaning that the dollar index is for the Forex market, Bitcoin would be for the cryptocurrency market. That, in other words, it's a dog wag the tail or a tail wag the dog kind of thing. Right now, I would say that Ethereum is more in control. So I would chase what Ethereum's doing. If you're trading Bitcoin, if you want to be bullish, see if Ethereum's on the upside. If Ethereum's selling off, then I would not be bullish Bitcoin in the short run, at least when it comes to direction. So right now, obviously, momentum's to the upside. So since we had that nice little segue, let's go to Ethereum US dollar. Now this one here is not consolidating like the Bitcoin is. It's actually coming off a nice low with a buy signal. Look at this. We had a buy signal a few sessions ago, and this is holding up right now. Today it's higher on the day, obviously. It made a higher move high and it's come back. It's in the middle part of its range for today. But this one here, even though it's in a bearish slide, is starting to show that it wants to have a little bit of a bounce. So let's say we're not going to go for the big high, but let's go from here to here and see where we can go. All right, so why don't we look at this? If we go to the 50%, let's just say that Ethereum and Bitcoin are going to be bearish for a while. Let's just say the bears do have the ability to maintain this month and a half, 2 month long trend as far as selling off. Well, if that's the case, as far as a correction, we should see it run out of gas somewhere between this $2,947 and $3,000 level. If we get above 3,000, that has us in a neutral to higher posture and showing where this downward correction or this downward bearish move is most likely ending. That would be if we get back above the $3,000 level. So look for momentum here. I think we will see a surge over the next few sessions into this area, find some consolidation, and then come back towards around 2,800. The key thing is do we fall below this low here? If we take out the 2,718 or basically $2,700 level, well, obviously the bears are in control, and you will see a continuance of support bashing, and also I would most likely believe that you would see Bitcoin US dollar also lower as well. So right now, where Ethereum's going, I think Bitcoin will follow. So that is our analysis for that. Do we have any questions on YouTube and Twitch? We do not, but we do have a couple of shares and likes. Thank you for that, guys. All right, so real quick, we're going to go back to the Euro US dollar where we started. And we are trying to look once again, make a run for higher move highs of the day. And yeah, looks like we're having a little bit more of a sell-off in the dollar once again as we head into the Fed meeting. Remember, we're not expecting very much because of the meeting, and we'll wait until after 2 o'clock to see what goes on. All right, with that being said, make sure that if you haven't done so, check out our book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com. What is this? Yeah, excuse me, I was looking at, there's a question all of a sudden on Twitch. All right, well, excuse me. On Amazon.com, check out High Probable Japanese Candlestick Patterns. It's available in Kindle and paperback versions. You can also, if you're a Kindle member, you can read, if you're already on Amazon Prime or whatever, you can read the Kindles at your leisure, which means you don't need to buy the book. You can check it out. You don't even need to buy the Kindle. But that's if you pay for the monthly subscription. So check it out that way as well. So just like you check out any other books, then we don't have to buy it. So there's multiple ways you can read the book. You don't have to purchase it. It is available through multiple mediums. So with that being said, make sure you check out forex-trading-unlocked.com, and also subscribe to our YouTube and Twitch channel, Forex Trading Unlocked. This is Teddy Keckstedt from Forex Trading Unlocked saying good afternoon and good luck in your trading, and wait until after the Fed meeting before you do anything, and don't jump in. If it starts to get crazy right at the meeting, stay out, let the algos do what they do. After it settles down tonight, tomorrow morning, get back in. Remember, there's always opportunity.